If you're watching this from the UK right now, what I'm about to show you explains why thousands of British investors are quietly moving money out of struggling banks and into physical silver. While the Bank of England issues financial stability warnings and UK banks face unprecedented pressure, there's a massive wealth shift happening that nobody in mainstream media is discussing. Right now, as I'm recording this on December 20th, silver just hit an all-time high. And here's what should terrify every British saver. Silver has more than doubled in value over the past year, up roughly 127%. That's not a typo. 127% gains while your ISA returns what? 2%? 3% if you're lucky? But before we get into why this is happening and how UK investors can position themselves, I need you to do something. Check the current silver price right now on your phone. Go ahead, I'll wait. Now write that number in the comments below because 6 months from now, when silver is potentially sitting at 80 or 90 pounds per ounce in sterling terms, you'll want proof that you were here at the beginning of this historic move. And smash that like button if you want more content that actually protects British wealth instead of the rubbish you see on mainstream news. So what's actually happening? Why is silver suddenly exploding while most people in the UK aren't even talking about it? Well, it comes down to 3 factors that directly impact British investors: supply shortage, industrial demand explosion, and most importantly for us in the UK, our crumbling banking system. Let me start with something that should make every UK saver sit up and pay attention. The Bank of England just issued a new financial stability report saying the risk environment around the UK economy has deteriorated sharply. When the Bank of England, the most conservative, cautious institution in Britain, says risks have deteriorated, what they really mean is things are looking pretty grim. They're comparing current conditions to 2008. UK share prices are at their highest level since the global financial crisis, and the bank warns a sharp correction is becoming increasingly plausible. That's banker speak for we're heading for a crash. And here's the kicker, they're not just worried about stocks. They're concerned about AI bubble valuations, fragile credit markets, and potential contagion across the entire system. This is 2008 all over again. Except this time British savers have been warned in advance. Now, what does this have to do with silver? Everything. Because while UK banks struggle and the Bank of England warns of crisis, British investors are rushing to buy silver at the fastest pace since the COVID crisis. In May 2025, the number of UK investors buying silver more than doubled from the previous month, jumping 108%. That's the highest reading in 49 months. And this isn't just retail investors panicking. Smart money, institutional investors, people who understand what's coming, they're all moving into physical silver. Why? Because silver has been one of the best performing UK assets of the 21st century, growing almost 10% per year on average since 2000. Compare that with just over 4% for the FTSE 100. Your index funds, your pension funds, they've been massively underperforming a metal that most financial advisors won't even mention. But here's where it gets really interesting for UK investors specifically. Silver isn't just a safe haven, it's becoming impossible to get. Global supply shortage is hitting British dealers hard. Bullion Vault, a major UK platform, saw 17.8 tons of net silver buying in April, the heaviest one-month buying since February 2021. And this is critical for anyone watching in the UK. You need to understand something about buying silver here that's different from other countries. In the UK, if you buy small silver bars or coins from most dealers, you pay 20% VAT on top of the silver price. 20%. That's a massive premium that immediately puts you underwater on your investment. But there's a way around this that most British investors don't know about. If you buy silver in wholesale 1,000-ounce bars stored in LBMA-approved vaults, you avoid VAT entirely. Silver bought through professional platforms and stored in approved vaults is VAT exempt in the UK, saving investors 20% immediately. That's huge. For a British investor, that's the difference between profitable silver investing and getting hammered by taxes. Now let's talk about why this supply shortage is getting worse by the day, because this affects UK investors just as much as anyone else. We're now in year 5 of consecutive supply deficits in the silver market. 5 straight years where the world has consumed more silver than we've produced. Since 2021, global demand has burned through 800 million ounces more than production. That's nearly an entire year of global mining output just gone. vanished into solar panels, electric vehicles, AI data centers, and smartphones that are never getting recycled. And here's what makes this terrifying for future supply. Roughly 75% of all silver mined globally doesn't come from silver mines. It comes as a byproduct of copper, zinc, and lead mining. So even though silver prices have exploded, mining companies can't just produce more. If copper prices drop because of recession, silver production drops too, even though silver demand stays strong. This is called inelastic supply, and it's setting up the perfect storm. The market is screaming for more silver, prices are at record highs, but production is basically flat. And for UK investors, this matters more than you think because Britain is completely dependent on imported silver. We don't mine significant amounts here. Every ounce of silver in the UK has to come from abroad. And right now, global inventories are at historic lows. The London Metal Exchange, right here in Britain, nearly had a delivery default back in October. They almost completely ran out of physical silver. When a major exchange in London nearly defaults on delivery, that's not a red flag. That's a 5-alarm fire. The borrowing costs for silver, called lease rates, normally sit around 1 to 3%. Right now they've spiked to over 200% annualized in some markets. What does that mean in plain English? There's so little silver available that traders are paying insane interest rates just to borrow it for a few days. That's panic, pure panic. So who's buying all this silver? Let's talk about UK investors specifically because the data is remarkable. As of October 2025, buyers represented 86.9% of open silver positions on UK trading platforms, with only 13.1% held by sellers. That's a 73.8 percentage point buyer advantage. British investors are overwhelmingly bullish on silver right now, and they're not wrong. A December poll of UK investors predicted an average silver price increase of almost 30% in 2025. Major banks agree. Saxo Bank and Citi both forecast silver reaching $40 per ounce. JP Morgan has a $38 target. But some analysts are even more bullish. Peter Croth predicts silver could exceed $300 per ounce by 2030 as global supply constraints and green energy demand explodes. But let me address something important for UK viewers. Why is silver suddenly attractive when UK banks are offering higher interest rates on savings? Simple. Because those rates don't keep up with real inflation, and your money in UK banks is at risk. The Bank of England is conducting stress tests on major UK banks right now, testing whether they can survive a scenario with 10% UK inflation, 5% GDP decline, and 8.5% unemployment. If they're testing for that scenario, what does that tell you about what they're worried about? And remember what happened in 2008. Northern Rock failed. Bradford and Bingley failed. British savers lost money despite FSCS protection limits. The government had to bail out the entire system. Well, the Bank of England is now warning we're facing conditions similar to 2008, with risks from AI bubbles, credit markets, and potential banking contagion. For British investors right now, silver offers something UK banks cannot. It's not someone else's liability. When you own physical silver, you own an asset outright. It's not a promise from a bank that might fail. It's not a government IOU that could be devalued through money printing. Unlike shares or banking, there's no requirement to register ownership of silver, making it one of the only forms of private investment left today. In an era of increasing government surveillance, capital controls, and financial repression, that privacy matters. And here's something else British investors need to understand. Silver Britannia coins, the UK's flagship silver bullion coins, are legal tender in Britain and therefore exempt from capital gains tax. That's massive. You can make unlimited gains on Silver Britannias and pay 0 CGT when you sell. Try finding another investment in the UK with that tax advantage. Your shares? Subject to CGT. Your property? Subject to CGT. Your Silver Britannias? Tax-free gains. That's why savvy UK investors are piling into them. Now, what's driving industrial demand that's creating this shortage? Green energy revolution. And the UK government is all in on this. Britain's commitment to net zero by 2050 means massive investment in solar panels, wind farms, electric vehicles, and smart grid technology. All of it requires silver. Every solar panel needs silver. Every electric vehicle needs 25 to 50 kilograms of silver. The green energy targets that Parliament has mandated cannot be achieved without enormous amounts of silver. And there's simply not enough supply to meet this demand. Battery electric vehicles use twice the silver of traditional cars. As the UK phases out petrol and diesel vehicles by 2030, silver demand from the automotive sector alone is going to explode. Then you've got AI data centers being built across the UK. Every server, every cooling system, every electrical component requires silver. Microsoft, Google, Amazon, they're all building massive data centers that will consume silver at unprecedented rates. So what should UK investors do with this information? Well, I'm not a financial advisor, so I can't tell you what to do with your money. But I can tell you what smart British investors are doing right now. They're buying physical silver, not paper silver ETFs that might not be fully backed, not silver mining stocks that come with company-specific risks, actual physical metal, either silver Britannia coins for the CGT exemption or wholesale silver stored VAT-free in approved vaults. Now before you rush out and buy, understand a few things specific to UK investors. Number 1. Avoid paying VAT. If you're buying coins or small bars from high street dealers and paying 20% VAT, you're immediately underwater on your investment. Use platforms that offer VAT-free wholesale silver storage or stick with CGT-exempt Britannias. Number 2. Understand that silver is volatile. It can swing 5 to 10% in a single day. If that's going to keep you up at night, this might not be for you. Number 3. Never invest money you can't afford to lose or money you need in the short term. Most experts recommend keeping no more than 10 to 15% of your portfolio in silver. Now let me make a prediction specifically for UK investors, and I want you to screenshot this. I believe British investors who buy silver now will see returns that absolutely crush ISAs, premium bonds, and UK equity funds over the next 12 to 18 months. The fundamentals are too strong. 5 straight years of supply deficits. No new production coming online. Bank of England warning of financial crisis. UK banks under stress. Government printing money. All roads point the same direction. Could silver correct in the short term? Absolutely. After a run like this, pullbacks are normal and healthy. I wouldn't be surprised to see silver test lower levels before continuing higher. But those dips are buying opportunities for UK investors, not reasons to panic. The long-term trajectory is clear, and British investors who understand this will position themselves accordingly. Before we wrap up, I want to hear from you UK viewers specifically. Are you buying silver right now? Have you looked into VAT-free options? Are you concerned about UK banks given the Bank of England warnings? Drop your thoughts in the comments because I read every single one, and your British perspective is incredibly valuable to this community. And here's my challenge. If you found this video valuable, if you learned something about protecting your wealth as a UK investor, do me a massive favor. Smash that like button and share this video with 3 British friends or family members who care about their financial future. This information is too important to keep to yourself. Your mates deserve to know what's happening while there's still time to act. And if you haven't subscribed yet, hit that subscribe button and turn on notifications. We're covering the biggest financial stories affecting British investors that mainstream UK media completely ignores. One final thought for UK viewers. A year from now, when silver is trading at significantly higher prices in sterling terms, people are going to ask how they missed it. The signs were all there. The Bank of England warnings, the supply shortage, the industrial demand, the VAT exemptions, the CGT advantages. But most British investors won't act because they'll convince themselves they're too late, or it's too risky, or they need to do more research. And you know what? Those people will be exactly where they are now, watching from the sidelines, wishing they'd taken action when they had the chance. Don't be that person. The information is right in front of you. The opportunity as a UK investor is right in front of you. What you do with it is entirely up to you. I'll see you in the next video where we're diving even deeper into UK banking risks and how British investors can protect themselves. Until then, stay informed, stay ahead, and remember, wealth in Britain isn't built by following the crowd. It's built by seeing what's coming before everyone else does.